So an introduction to scenario analysis. So what is a scenario analysis? Maybe I did mention a little bit about this in our Financial Modeling 101 class. It allows analysts to test various assumptions. So as you all know, we have made a lot of assumptions. We marked it in yellow cells. And these various assumptions, if you have 100% confidence in those assumptions, and if you're definitely sure that that's going to happen in the future, we won't be needing this kind of technique. However, as most of you have felt, these assumptions are not 100% accurate. In fact, in the actual financial world, most of the assumptions will be very different from the actual outcomes. So a scenario analysis is needed. Sometimes we call it a bull-bear analysis. So we make a base case, which we did, and then we make a scenario where all of the outcomes are better than what we have assumed in our base case. And we also make a worst case scenario, which is called the bull case. So names differ by analyst. Sometimes it's called best case, worst case, sometimes optimistic, pessimistic, blue sky, dark sky, whatever you call it. These are all names of scenario analysis. And not only do we do this, but sometimes it's used to analyze certain event outcomes, like what's going to happen to revenue, or what's going to happen to our equity value or enterprise value if something like COVID-19 occurs again. A couple years ago, many analysts did something like what's going to happen to the stock prices if COVID-19 shows quick recovery, what's going to happen if COVID-19 lingers for a very long time. We try to analyze the impacts of the duration of COVID-19 to our stock prices. Sometimes, if the company has a very big lawsuit going on, and if the according to the outcomes of the lawsuit, if the company fundamentals differ widely, probably investors or analysts, they want to know what's going to happen to the company if they lose the lawsuit and receive some kind of punishment. What's going to happen to the fundamentals? And in many biotech, or if you're doing a modeling for a R&D heavy industry, we want to know what's going to happen to the company value if they succeed or if they fail the research and development. And for biotech companies or pharmaceutical companies like probably like Pfizer, AstraZeneca, or Boehringer Ingelheim, or whatever, the trial results are very important. The succession or failure results are highly important to the company valuations. So we make a scenario analysis on whether they succeed or not. And we watch how the stock prices are affected by it. So we're going to make a very thorough scenario analysis. It's kind of like a full-scale scenario analysis, which is often used in mergers and acquisitions. So we're going to build a detailed model. We're going to start from building the input tab. So there are going to be different types of assumptions in our input tab. And then we're going to also build an output tab for the current scenario. So we're going to build it on a different spreadsheet, so we won't be knowing the changes of the outcome on the same sheet. So it's going to be very inconvenient moving back and forth to other tabs to see how the results are changing. So we're going to build an output tab on the right on the same sheet. And then we're going to build a hard copy display for comparison. So because number 2 is it shows only the current scenario. We cannot compare the outcomes of different scenarios. So we're going to build a hard copy display on the bottom for comparison. So let's move to our Excel spreadsheet and meet you guys there.